Hey guys, what's up? How's it going? Robin here. Welcome back once again on the channel, and today we're going to be doing a deep dive of my portfolio. I haven't done one of these for quite a while where I really go into the stocks and we talk about a lot of things. So I'm going to be going through my portfolio. We're going to be going through each stock one by one, and I'll give you guys a lot of insights and talk about a lot about my goals and whatnot with the portfolio, and we're really going to take our time. So it's going to be a long video. There's going to be a lot of me rambling on about things. So hopefully you guys like that kind of stuff, but I'm really going to be transparent here and show you guys everything inside my portfolio and all the stocks and whatnot. So if you guys like this video, be sure to smash that like button. And I do have a special surprise for you guys. I wanted to publish this video, I would say about yesterday on Friday when I actually filmed most of the video, but we've been pretty busy. Turns out I actually had to look after my dad's dogs this weekend, so the house has been actually a little bit crazy. So if you see a lot of like stuff in the background, you know, toys and stuff like that, it's been absolutely hectic. We've had two dogs here. Here's a shot of Milo here. He's one of the puppies we have. So we had two big labs at the house. It's been a little bit chaotic. If you guys are dog owners, you know what I'm talking about. But anyways, I just wanted to kind of give a shout out there. It's been pretty interesting, but it's been a lot of fun. Lots of more love in the house than usual. But anyways, guys, let's get inside the video. Let's take a peek at the portfolio, and we'll do a quick little update, and then we'll dive deep, and I'll show you guys all my stocks and all that good stuff. Alright guys, what's up? How's it going? Welcome back for another video on the channel. In today's video, we're going to be doing, like I mentioned earlier, a deep dive inside of our portfolio. So we'll go over the returns. We'll give you guys an update on the stock market this morning. We just opened up at the time of doing this video. When this video actually does get published, it might be either later on today, it might even be in the weekend, but at the time of doing this recording, it actually is early Friday morning, so just so you guys know. But I just want to give you guys an update on that. When this video actually comes out, I'm not too sure. Things are a little bit hectic right now, but hopefully I can get it out by the end of today, or if not today, maybe like Saturday or something like that. But anyways, we have three portfolios here we're going to cover. I'll give you guys the returns, and then we'll jump inside the individual stocks, and we'll do a deep dive on those, and I'll give you guys all kinds of cool information on that. So the first stock portfolio we're going to cover is going to be the TFSA. So the TFSA is going to be the first one here. We have $91,000, just under $92,000. The 1 day return, which is this morning, since the market's open, is up 1%, which is $500. So again, we're continuing that trend of growing. It's been actually quite a bit over the past little while. The past week we were up 2%, so you've seen that nice little jump up, $1,716. So obviously when you have a bigger portfolio, you know, the small percentages actually mean quite a bit. The 1 month return is up 8%, so we got a lot of those gains that we lost basically in July 14th. Which was like about a month ago. We were saying $84,000, and we've just seen that kind of jump up, you know, just in 1 month, $7,000, 8%. So yeah, that's pretty cool. Why I always say just put your money in the market, because you never know when it's going to go back up. The last 3 month return, we can actually see the bigger picture of what happened. So you know, our portfolio's here at 90,000, kind of similar to what it is now. Things drop down, we keep investing, and now things have gone back up to basically almost to where they were at, and we have more money. So it's pretty cool how that works. The 1 month return for the TFSA is about 3%, and this is quite the interesting graph. It's kind of all over the place. The all-time return for this particular TFSA is $8,000, 10%. So you know, at the end of the day, we're still growing. We're putting our money back in, and that's the whole purpose of doing our investing in the first place. We still have a bit to recover from the beginning of the year. Essentially in April we did see a significant drop here, so we're not quite back up there, but we're slowly getting there. And we'll check out the personal account here really quickly, and it should more or less be the same. The 1 day return is 0%, which is $70. This is the more Canadian dividend payers, dividend stocks focused account. The 1 week return is 2%. The 1 month return is 8%. So once again, even it grew quite a bit. The 3 month return is 0%. 1 year is about 2%, and all time is 4%. So even the personal account is growing quite a bit over the past, you know, couple months or so. So just really quickly, before we go any further in the video, I just want to give you guys a quick little shout out that in the description of the email, I actually have a beginner's video course for anybody who's brand new. You want to get started with dividend investing, check out my 0 to 100K. This is a free course that I give to you guys. It basically goes step by step how I built a Wealthsimple trade portfolio, and it really is for you guys who want to take that extra step. 100% free, no selling, no nothing in there, just good quality information for you guys to check out. So definitely check out the link in the description of this video. Alright, so here is going to be the deep dive of the portfolio. We'll go through these stocks one by one so you guys can see them. We'll take my time, I'll ramble a little bit. This will be a part of the video where we can really dive in here, and at any point in time I will You guys can pause the screen if you guys want. I'm also currently working on a solution, like I mentioned earlier, with Blossom Social, so you guys can have actually real-time access to my portfolio. We're just working on getting that hooked up. So until then, we're gonna have to do with this, and I will be using Track My Dividends to kind of give you guys an overview picture, which we will jump into in the next part of the video. So we do have $46 available to trade today. I'm probably just gonna put this in whatever later on today before the end of the video. You know how I normally do it, nothing too crazy. We already know what we invest into. We'll just probably pick something up that we maybe something that's low inside our portfolio. But to do a quick little recap here, the first stock we have is Algonquin Power and Utilities. This is an old utility company I was buying quite a bit during the pandemic. They did have a rough year or so. Basically what happened is they had some crazy storms in Texas or something like that. They suffered a lot of losses and whatnot, and the stock dipped down quite a bit. Now the company is still pretty solid, and I do recommend it. They're a good dividend company. They have lots of good dividend increases, good dividend yield, and I don't think the company is really in a spot where it's going to be hurting long term. So, you know, I haven't really bought this for a while, so this is a stock I might start buying into once again. We have seen it go up, down 5% in the last year. The past 3 months, we've seen a bit of a growth. Last month or so, 6%. So it is getting that recovery. It is happening. So if you did invest in the stock, you know, during the past little while it was down, you might be doing really good. So of course it's a good stock. You know, we haven't bought too much, but it is the first stock inside my portfolio. We have about $1,000 worth of AQN. Going down here, we have one of my favorite consumer-based stocks, which is ATD. Kind of hard to say that. Alimentation Couche-Tard. They are a great company. They own a lot of the convenience stores here in Canada. Cool thing about this company is they are globalized. They have stores all over the place. They're constantly expanding. I love companies that do this because they always seem to keep growing, and there's so much more opportunity when companies are, you know, going outside of, you know, their demographic, like Canada, for example, which is always super cool. So ATD has actually been doing quite well. The 1 month return is up 11%. So we did see significant growth in the last month. Last 3 months is, I guess it's down 0% because it's seen the dip, so it did recover. The 1 year return is 14%, so nonetheless, this is a growth-based stock. They don't have a big dividend yield, but they do have big dividend increases, and that's why I like this company. So it is kind of like the growth holding inside my portfolio, but it also has potential to kind of use that dividend yield to grow over time. And look at the growth of this company over the past 5 years. It's up 90%, and that doesn't include any of the dividends. So pretty solid. It might be like, you know, low 90s to maybe 100% with the dividends. I don't know. But 89% growth in the past 5 years is absolutely crazy for the stock. Anybody who's hold ATD or is investing in this company obviously is doing pretty well. We're sitting at a 20% return overall as we've regularly been buying into it inside the TFSA. Next up, we have a CNR. We have 5 shares of CNR. CNR is obviously a pretty expensive stock, sitting at about $163. I haven't bought too much into the railroads. I think they're both pretty good. I just went with CNR. Pacific CP is also pretty good as well. The 1 year return for CNR is up 20%. So a lot of these companies are doing pretty good. Looks like a lot of the Canadian companies did well this year, even though the US markets have not done quite well. But we are starting to see them rebound. Next stock we have is Fortis, which is about $1,000, about 8% return overall. Fortis is a pretty defensive utility stock. There's not too much to say about it, but it's more bringing balance inside my portfolio. You know, we have AQN, which is a little bit more up and down kind of thing, and then we have Fortis, which is a little bit more defensive. It's that defensive, consistent dividend stock. It really is that long-term hold. Pretty kind of boring maybe in some people's eyes, but it is, you know, that consistency that I have inside there. You'll see this portfolio is a mixed match of a little bit of everything, so we're trying to get balance here. The next two ones are 2 covered calls that I've recently been buying. They're pretty new inside the portfolio, and they're a lot different than the other stocks I have. So these stocks here that we covered so far, and most of the ones we're going to cover later on, are all good dividend quality companies. They're all companies with good stock growth. They're all companies that you buy, you hold for the long term, and they do well. You know, whether it's growth based, dividend based, whatever it is. These 2 covered calls are actually 100% passive income based, and I've been buying them to focus on growing the passive yields inside the portfolio. So HYLD is the US version, or holds US holdings, and HDIV holds Canadian holdings. So we have that for diversification purposes. But basically they pay us the dividends, and we're not too concerned about the stock. The overall returns from the stock growth perspective, because they pay out massive yields. HYLD pays out a 10% dividend. I currently think it's probably more closer to 11 to 12%, but that's obviously going to go down as the markets go back up. In fact, if we look at HYLD Over the past month, it is up 5%, and over the past 3 months, it's still sitting down a little bit, quite a bit. So that yield is probably going to be pretty good. But once again, we're not focusing on the actual stock ticker. Keep in mind the whole entire market went down, so keep that in mind. We're not focused on the growth, we're focused on the passive income. Now, Wealthsimple Trade doesn't show the passive income growth for the individual stocks on here, which kind of sucks. So hopefully that's something, we can kind of track a little bit better, but I do track it on my monthly dividend sheets, and I'll show you guys that later on in the video. But once again, these are just here just to kind of embrace more of the passive income style. I know a lot of people have portfolios that are 100% passive income focused. We're not quite there yet. We might get there one at some point in time, or we might slowly grow it over time, but we're taking it slow for now, kind of getting a feel for them and seeing how they perform, and just using a little bit of our money to benefit from more of those higher yields as we get older and whatnot. So Severia Corp is the next one. This is a stock I bought during the pandemic. I'm basically looking to probably dump the stock whenever it goes up. It's down -4%, so I don't know if it's had a good, haven't really been paying attention to it. The 1-year return is down 30%, and the 5-year return is about 0. So, during the pandemic, saw a big increase because everybody went all crazy with healthcare stocks, including myself. I bought a little bit. I didn't go too crazy, obviously. I only bought a couple $100 worth, but we can see that it's kind of getting back to reality. And I probably should have sold the stock, but who knows? I'm not really a guy to buy and sell stocks like that. But that's why you don't buy stocks that are trendy. It's just important lessons to learn. It's only $300, whatever. We'll wait till it gets to, whatever it gets to, and we'll sell it. But it is something to keep in mind. Stay away from trendy stocks unless you're willing to accept the risk that comes with them. TELUS is the next stock. We have about 1,000 shares, up about 10%. TELUS is our telecommunications company. Big fan of them. TD is my favorite bank stock. This stock has done well. Obviously, this year it did go down a little bit. The 1-year return is down 1%. So it's been kind of going down with the market overall. But we should, once again, TD is a solid company. They're always growing. They're always doing well. Their last revenue reports are always really good, and they have good dividend yields and whatnot, and good dividend growth. So it's always going to be a big stock inside my holdings, and it's a good quality company, so it's obviously doing quite well, sitting at 13% gain. And then at the bottom here we have VFV, which is the S&P 500, of course. I'm still pretty young. I'm 31 years old at the time of doing this video, so I do want to see a lot of growth inside my portfolio and set me up for the future. And then we can slowly transition that growth into more passive income as time goes on, and that's kind of the plan here. So S&P obviously has taken a big hit. This year, the 1-year return is down 3%, but you know what? We're starting to see a bit of recovery, so that helps balance things out over time. The last 3 months, it is up 4%. The 1-month return is up 9%, so it is starting to kick up a little bit. 5-year return for the S&P 500 is still at 73% gains, so it's always going to be a core holding, and plus you get that massive diversification that the US market brings. So that's a quick little overview of the TFSA. We'll jump over to the personal account, and I just want to recap a couple stocks here really quickly. The personal account is more or less the same as the TFSA. I think we just have a couple different ones here. Our personal account is more focused on Canadian dividend payers for now. That might change in the future. I don't know. We're kind of planning that out as time goes on. But other stocks we haven't covered is CNQ. I did buy some CNQ inside my personal account. Canadian Natural Resources. We bought some Canadian Tire, another consumer stock. I'm kind of getting into that. And then we also have POW, which is Power Corp of Canada, another financial company. And then I think that's pretty much it, other than Manulife. And we're just kind of, once again, the personal account is focused on more of those consistent, good quality. It's a pretty conservative portfolio, but I like to see gains. I like to see consistency, and it's been performing pretty well for me, so I can't complain. I'm just going to keep doing it, and slowly over time, I will probably add a couple more stocks inside the personal account and play around with it. But that's pretty much the deep dive for the stock holdings. Let's jump inside, track my dividend, and we'll do a quick little overview and play with some of the numbers in there. So here's one of the portfolio trackers that I'm currently using for my portfolio, and I like it because of the fact that I can compare all the accounts into one here. So here is all the accounts together here. Some of you guys have mentioned a couple times that I share my average cost prices and stuff like that. So what I'm going to do is at this part of the video, you guys can pause the video. You guys want to see, here's all the stocks, basically combined together. You can see the different things like the shares I own, the prices, how the markets have changed, the average cost, my profit, gain or loss, the dividend yields, yield on cost, and the annual income here. So a couple cool things. You guys can basically pause the video if you want and take a peek at some of the stuff if you guys are interested in that. But more or less, that's pretty much what's going on there. Again, working on a better solution for this in the near future, so stay tuned for that, guys. Portfolio yield is about 2.73%, so it's not a huge yield, but keep in mind some of those passive income stocks are starting to bring that up a little bit. So it's not super passive income, but it's not bad either, right? It's slowly getting there. Yield on cost is 2.84%. Annual income is $3,000. So we're still very much focused on growth inside this portfolio, mostly because a big chunk of the holdings is in the S&P 500. We have quite a bit of money in there, and that's that. So if you go over to diversification, we can check out the portfolio pie to give you guys a better idea. We have 15 holdings in total, like I mentioned at the title of this video. The largest holding is the S&P 500. The smallest is Canadian Tire, since we just recently bought that stock. We have 7 sectors, and our largest holdings are ETFs. So 85% of the portfolio is our ETFs. I'm a big ETF guy. Over time that might change a little bit. There obviously is overlap between some of my individual stocks. I know that. But over time, we'll see how things go. Maybe I'll transition to more individual stocks. I might not. We'll just see how things go. But I love ETFs. They're perfect for beginners, and I'm still very much a beginner-based investor. I also like the fact that they're so simple, and they do offer you some unique things, like if you want an ETF that pays a monthly dividend or something like that, you can get that as well with them, which is super cool. So once again, 50% VFV, right basically on the dot there for the S&P 500. So 50% of my portfolio is in U.S. growth-based stocks. About 30% in VDY, which is the Vanguard Canadian-based high dividend stocks. This is a lot of the consistent stocks. This is where a lot of the overlap happens between some of the individual holdings that I have. So over time, I might move away from VDY, but for now, I'm just going to keep it there just for the diversification, and just in case if some of the stocks I pick don't do too well, it's just there as a safety net kind of thing. And it does pay a monthly dividend, which is super cool. TD is our biggest individual holding, no surprise there. It's my favorite bank. HYLD is at 3%. ATD is at 3%. TELUS is at 1%, and some of the other ones are pretty low here. So, over time, we'll work on growing these out, and we'll work on getting some of the different ones out here. I do intend on bringing out some of the passive income stocks like HYLD and HDIV as well, but I just wanted to give you guys a quick little overview of the individual holdings inside my portfolio. And the next part we will cover is the upcoming dividends. So we got lots of dividends coming up here. We'll close that there so you guys can see. So obviously these are just estimates. Until the company declares the dividends, nothing is for sure. So some of these trackers are not going to be 100% correct here, but our highest month has been 340. Once again, that's not 100% correct. Lowest is 148. Variance is 50%. We can see the difference between each month. Obviously every quarter, because we hold 50% of our portfolio in S&P 500, we're going to get that quarterly dividend. It's going to bump it up quite a bit. And you guys have seen that in my monthly dividend payments. We can also see each individual stock and how they intend to pay us out. So this is a cool little tracker. You can see the different stock payout calendars. It's always kind of cool to see, all the different paychecks you're getting every single month kind of thing from holding these companies. It's kind of nice. But we'll take a peek at some of the differences. So once again, HYLD here, for a stock that I hold about, what was it, like $2,000 or $3,000, to get a $40 or $40 dividend is huge. So that's where these passive income stocks come from. If you guys want higher yields, you want higher monthly payments, you can invest in them, but just keep in mind you might be sacrificing growth for that, and I'm perfectly okay with that with a high growth portfolio. So obviously they make a big difference. It does add up quite a bit, and we can see the differences here between the different months here. And then we have a dividend calendar if we're interested in that, but I just want to give you guys an update on that so you guys can see how basically where I'm getting the money from and how these stocks intend to pay out. Looks like September is going to be a pretty big month as well, which is no surprise. Lots of dividend payments from most of the companies we hold, so pretty excited for that. And really quickly, before we go any further in the video, I just want to give you guys a quick little recap about actually my goals as an investor, and this is an important thing. I just want to highlight, one of the big things you've seen inside my portfolio is I do focus on a little bit of everything. There's like a good balance goal here, but the reality is my portfolio has constantly changed over time. And when I first started investing at the beginning of 2019, I was 100% focused on dividends. I was like, I'm going to be a passive income investor. And then I switched to, no, I want to be a growth investor. And then I kind of found out, there's a good balance to kind of have a bit of both. And then actually from there, I actually transitioned to a little bit more of a higher passive income investor, bringing on some of these covered calls in small percentages. And main thing I want to just kind of tell you guys is that it's okay to, change things over time. I like to have a balanced approach because you're going to critique things. Your life's going to change, your goals are going to change, the way you see investing is going to change over time. So my portfolio right now is pretty focused on growth. We still have growth, I'm still young, but as time goes on, as I'm exploring different new things in life, I am kind of seeing the value of having some passive income coming in and really having a portfolio that you can enjoy now, or you can have some of the benefit now, but you can also enjoy and have some of the benefit as you get older. And it's up to you guys to decide what quantities you want to do that, right? Like how much growth do you want? How much passive income do you want? How much, money do you actually want to be bringing in to make your life easier right now? That's up to you guys to decide. And it's something for me that's constantly changing. So I just want to add that in here really quickly because really, a lot of people will say that this is the best way, that is the best way. Really, guys, there is no best way. It's up to you guys to decide because investing is unique. It's unique for each person because you're not really investing is about lifestyle. You're investing to get the lifestyle that you want and to live the life you want. So make sure you pick your portfolio and you have a strategy that aligns with that. And as we work our way towards the end of the video, we'll do a big recap of the dividend yields and our monthly dividend income because this is something I haven't talked around too much about the portfolio. But whenever I do a deep dive, I think it's important to kind of address this because newbies can see the difference between things and how things basically change over time. So when you first started this portfolio, on Wealthsimple trade, the main portfolios we started was in January of 2020. I did have a Wealthsimple Invest account. I started in, I think it was the beginning of 2019. So that obviously did its own thing. It grew. We got some gains off that. But when we started our dividend portfolio, when I started tracking it on Wealthsimple trade, buying my own stocks basically, was in the beginning of January of 2020. And we made a measly 44 cents on our first month. The second month we made $1. And this is just me throwing whatever money I had basically into my portfolio. Some months it would be a lot, other months it wouldn't be that much, but we were pretty aggressive at this stage. I'm not gonna lie, I was throwing like $500, $1,000 a month, some months even more than that, just to grow that portfolio. And I'm still focusing on that because we can see the the growth over time has been quite a bit, and we've seen pretty significant growth. The 1 year growth at January of 2020, we have 44 cents, and 2021 January is paying us $40. From January 2021 to January of 2022, we're looking at $369. So pretty significant jumps. Obviously, I did combine the old big TFSA into the new one, so that counts for a big chunk of that big jump up here. But it's been steady growth, and it's starting to get to, it's starting to be a decent chunk of money to get. And I can either just put that money in whatever I want. I could use it to, increase my wage. I could use it to reinvest, to grow my investments. It's offering me a lot of flexibility, and I'm so happy I did this. So I'm super, super pumped. August, we have $151 in dividends. Actually, it's a little bit more than that because I haven't calculated HYLD and HDIV yet. So it might be like closer to 200 or something like that. I haven't updated that yet. The graph here kind of basically will give you guys a visual representation. If you're looking at this, we can see the first few months, obviously, maybe a couple bucks here, but on month number 9, actually month number 12, it took us 12 months to hit $50 a month. So the first year or the first beginning stages is rough, not gonna lie. But as time goes on, it gets a lot easier. From month 12 to month number 16, we doubled to $100 per month, so that was a lot quicker. From month 16 to month number 22, we doubled to past $200 a month. And then we've just seen consistent growth from there, and we're slowly starting to get that growth again. And once again, guys, I do reinvest all of my dividends back inside the portfolio. A lot of you guys ask me that because I do like these little case studies where I show you guys what I'm quote unquote buying with my dividends, but I'm just using my actual income I receive from my jobs and the YouTube channel and different stuff like that. And I'm actually reinvesting the money from the portfolio. I'm not going to touch it unless I absolutely have to. But there might be some times in the future when that happens. But I just wanted to give you guys an update on the monthly income because I know this stuff is really important for beginners to see it because it's important to understand how long it takes. It's important to be realistic, and obviously there's things you can do to jumpstart this. We obviously have a fairly low dividend yield portfolio. If you had a higher yield, you could make a lot more money, right? If we put all of our money into some higher yield of funds, we'd be earning a lot more than $151 or $200 to $300 a month. But once again, we have goals. I'm going to stick with them, and that's what we're following inside the portfolio. Last thing I wanted to do just really quickly before we get to the end of the video is I wanted to do a recap of the markets for this year just to show you guys how things have been doing overall. So we talked about the S&P 500 earlier in this video. Let's do a quick little recap here. So the year to date returns of the S&P 500 is down negative 11%. And this basically is saying from January 1st of 2022 to today's current date, which is August 12th, the S&P 500 is down 11%. So it's still down quite a bit. A lot of people talk about, are the markets going to dip? Are they going to crash? They kind of already dipped quite a bit. Who knows if it's going to rise back up or if it's going to keep dipping, but we still have a long ways to go. I just want you guys to kind of see that we're still actually dipped overall, but because I've been regularly investing throughout the dip, our portfolio obviously hasn't been doing too well, and that's really is the key. Dollar cost average if you have to, put it in as early as possible. Keep investing during the dips. That's what you guys got to do to make the best of this. So I just wanted to kind of address that. Even though it looks like the S&P 500 is recovering and we've done quite well, it's also because we've had more money in the market for a longer period of time, but also because we've been buying the dip. It's such an important thing to understand. And we're going to take a peek at VDY, which is the Canadian markets. Now, Canadian market VDY is really focused on more of the financials. It's not an overall market, but it does give you guys a good representation of some of the bigger companies in Canada and the more popular ones. And it's the ETF I hold, so we're just going to use it as an example. You could punch in whatever Canadian ETF you want, but if we compare the Canadian markets to the US markets, Canadian markets are only down 0.6%. So the Canadian markets obviously have recovered. The Canadian stocks have had a good year, and I've kind of been observing this recently where the US markets, whenever we have a bad year in the US markets, the Canadian stocks do well. Whenever the Canadian stocks have a bad year, the American stocks do well, and vice versa. Sometimes they both move together, but I kind of noticed that over the past little while, which is why I always opt to hold both, U.S. stocks and growth and Canadian stocks, just in case something happens. But it's a cool little observation I've been noticing. So let me know what you guys think of that in the comments. But anyways, guys, I just wanted to point that out really quickly. Alright, so that's the end of the video. So just really quickly, we're going to wrap this up. I know this was a pretty long video, a lot longer than my usual ones, but like I told you guys, I really wanted to dive in. So I know a lot of you guys are probably going to have questions, so feel free to leave some questions in the comment section of the video. I'll try to get back to them as quickly as possible. And really quickly, before we end the video, I just want to do a shout out to Blossom Social. I've talked about this app a couple times on the channel, but I'm super excited. And if you guys want to see my actual portfolio, you can check it out on Blossom Social. Be sure to use the referral code Robin if you guys want to get a little bonus when you guys sign up. But other than that, guys, take care. Hope you guys have yourself a good week. I'll see you guys later, and have a good one.